Welcome back everyone, this is Mo Investing and we keep things short and sweet, so let's jump straight in. Now SpaceX is set to IPO on June 12th and it looks to be the biggest IPO ever, so I thought this one would be a pretty interesting one to cover. Now the SpaceX business is quite multifaceted, so it's split into three key segments: their connectivity segment, the space segment, and the AI segment. Now within the connectivity segment, or Starlink, they operate a global low Earth orbit broadband network with approximately 9,600 satellites, so they offer broadband to a lot of customers there. Their space segment, which is the core business, builds and launches reusable rockets, enabling both government agencies and commercial customers to send payloads to space, and then they charge them per launch. Now their AI business includes a couple of things within that, so they have their Grok AI model which they offer. Then they also have some of the largest AI data centers in the world, and the X social media platform is also included within this segment. Now if we take a look at some of the numbers related to the IPO, their target valuation is 1.75 trillion and the initial stock price is $135 with 555 million shares going on offer. The IPO is looking to raise 75 billion through the offering of those shares. And if we take a brief look at the balance sheet, their revenue for 2025 came in at 18.7 billion, up 33% year over year. Their cash plus cash equivalents was at 15.9 billion, and then debt at 29.1 billion, and free cash flow being very negative at around minus 14 billion. Now with that, let's take a closer look at the S1 filing, and I think the best way to look at this is to break it down by segment. So in terms of Starlink, they're at 10.3 million subscribers with a lot of growth potential, with some analysts estimating that they could almost double the subscribers within the next year. However, their ARPU, or their average revenue per user, is down to $66 from $81, and the hope is that the increase in subscribers could offset that decrease. Now Starlink is their main revenue segment and it's their only profitable segment so far. So in terms of revenue for 2025, Starlink generated 11.3 billion in revenue, the capex was at 4.1 billion, and then the operating income was at 4.4 billion. If we move on to the space segment, now they are the leader in the space, pun intended, and to put that in perspective, they've completed 165 launches in 2025, and that's more than all their competitors combined. Now for 2025, their revenue in the space segment was 4.1 billion, their capex at 3.8 billion, and their operating income was at minus 657 million, so they're operating at a loss there. Moving on to their AI segment, in 2025 they generated 3.2 billion in revenue, they spent 12.7 billion in capex, and their operating income was at a staggering minus 6.4 billion, so they're losing a lot of money in this area. However, they are signing some deals that could offset this and it shows some potential. So Google has agreed to pay SpaceX 920 million per month for cloud computing, and then they also have a deal with Anthropic, which apparently they'll be paying them 1.25 billion per month for compute. So these deals do show that these companies have a lot of AI demand right now that they can't fulfill with their own infrastructure, presenting an opportunity for SpaceX. However, once they are able to fulfill that demand, SpaceX will be losing the business from these companies quite quickly. So I think it is an important area to watch for SpaceX. Now let's take a look at outlook for 2026. There's Starship, which is their next generation rocket. If that does become fully viable this year, that could significantly reduce their costs per launch. There's also Starlink subscribers, which are expected to grow this year. Then with the current AI compute demand, there's potential for more deals with other companies to utilize their data centers. And then finally, they're in the running for a multi-billion-dollar security contract that will be a significant revenue source for them. Finally, let's move on to valuation and verdicts. So their operating income for 2025 was minus 4.2 billion. So they are a company operating at a loss. Their target valuation, as we've said at the beginning, is 1.75 trillion. And then their price to sales based on 2025 revenue would come in at 94, which would make them very overvalued. For verdict, I think it's obvious what I'm going to say here. I think it's one to spectate instead of buy. Historically, IPOs aren't a great entry point for retail investors, and I think it's the same case here. Although I do think the stock price can spike quite significantly after the IPO with this one. Based on the amount of shares and supply demand, this one can really shoot up in my opinion. But I do think it's one to avoid based on the quality of the business right now. However, I think it's one to watch for the future. This business could become really interesting with a lot of growth verticals, so it is one to watch out. So that's it for the video. Thank you for watching, and I'll catch you in the next one.